I'm going for a 9-minute trade duration. It's not the standard choice, but when using envelope, the recommended practice is to align the expiration time with the 3 candle periods. Now let's allow a few moments for the price to precisely retrace to the envelope. Meanwhile, feel free to explore other currency pairs as well. Let's switch over to the trading platform and check out Euro and Japanese yen. The envelopes indicator offers one more option for trading in a trend channel on the rollback or breakdown of the boundaries. The tool is based on the idea of moving averages and builds a dynamic range on the price chart. With this range, the price should fluctuate most of the market time. Hey there, I'm Mary, and I'm here as your dedicated trader, your personal trader as well. I've got an absolutely fascinating video for you today. So don't forget to hit the subscribe button to keep up with all the fresh content, and I will really appreciate a like button if you enjoy this video. In my Telegram channel, I provide precise signals that we can use to make profits together. You'll discover the link to my Telegram channel right in the description. Just sticking to our usual routine, today I'll kick things off by showing you real-world examples, and then I'll dive into the theory behind it all. So sit back, relax, and enjoy the show. Let's put the envelope tool to the test in live market conditions. While theories and examples on historical charts are helpful for grasping the fundamentals, there is nothing quite as persuasive as real money experience. I have identified a suitable scenario on the USD and Japanese yen currency pair. We can dive straight into a trade based on the envelope signal. I'm going for a 9-minute trade duration. It's not the standard choice, but when using envelope, the recommended practice is to align the expiration time with the 3 candle periods. Given that I'm analyzing the chart using a 3-minute time frame, a 9-minute trade seems fitting. Now let's allow a few moments for the price to precisely retrace to the envelope. Meanwhile, feel free to explore other currency pairs as well. Perhaps there's even more favorable opportunity lurking. Now, at this juncture, the most promising situation lies with USD and Japanese yen. While there could be potential setups elsewhere, confirmation might entail waiting for another 5, 10, 15, or even 20 minutes. Here, all we need is a brief pause. In any event concerning USD and Japanese yen, we're on the brink of a position entry. Let's hold off for the price to dip slightly further. Interestingly, a similar scenario has emerged on the Euro and Japanese yen chart too, mirroring what's happening with the USD and Japanese yen. This isn't surprising, currency pairs often display correlations. Let's switch over to the trading platform and check out Euro and Japanese yen. While the payout percentage for this pair is merely 50%, that's quite low and doesn't align with my principles of risk and money management. Therefore, I won't be entering here. My primary aim, though, is to generate profits while also guiding you to achieve the same. Alright, we're all ready to initiate a position on the USD and Japanese yen currency pair. After a slight price dip and rebound, I'm entering a $1,000 trade on the downward side. Now, let's delve into why I took the time before opening a trade, why I was selective with currency pair choice, and how to engage the market in such situations. Starting with the envelope indicator, it ranks among the most potent tools in technical analysis, offering valuable insights into market conditions. Currently, I've configured the envelope with a period of 20 and a deviation of 0.1. Additionally, I've layered a simple moving average with a 6 candle period. Given my analysis time frame of 3 minutes, I'm executing trades for 3 candles, translating to a span of 9 minutes. For those working with different time frames, like a 1-minute chart, you'd execute trades for 3 minutes. In a 5-minute time frame, trades would extend to 15 minutes. I believe it's crystal clear. Now allow me to elucidate how to effectively employ the envelope indicator. Ideally, you'd initiate a trade when the price breaches the envelope boundary and subsequently retraces within it. In essence, the price initially approaches the upper envelope boundary, possibly surpassing it slightly, and might even stabilize over it. This precisely mirrors the scenario on the USD and Japanese yen chart. The price simply broke through the upper envelope boundary with a robust candle. That covers the envelope technique. As for the moving average, it should intersect with the candle as it returns within the envelope boundaries. To be more precise, the candle should cross our SMA. I was eagerly anticipating this specific juncture to initiate a short trade. On the flip side, if I were aiming for a long trade, I would have fell off for the converse circumstance. That is, the price should have dipped below the lower envelope boundary or come into close proximity with it. The green candle that rebounds within these confines should have intersected the SMA. These conditions are easily identifiable on the chart, and the strategy itself is quite straightforward. The envelope is constructed in a manner that during regular trading, the price predominantly stays within the boundaries outlined by the indicator. If the price ventures beyond this range, it indicates an uncommon occurrence in the market, a deviation from the usual movement for that particular asset. Subsequently, a corrective phase often follows such movement, re-establishing equilibrium between buyers and sellers. It's within this correction that we capitalize on profits. The crux of this strategy lies in configuring the envelope deviation period to 0.1 and exclusively engaging in trades spanning 3 candles. Opting for 5 candles might prove excessive, whereas committing to 1 or 2 candles could prove inadequate to navigate the correction. This comprehensive strategy aligns all its guidelines to the specific indicators and the trading instrument, namely binary options. That's why, adhering to a 3-minute time frame, I entered the trade for an unconventional duration of 9 minutes. Now, a mere 5 minutes remain until the trade concludes, prompting us to bide our time. The trade is reaching its culmination and the strategy unfolded almost impeccably. I entered the trade not precisely at the optimal point, but the price indeed corrected below the prior minimum, mirroring the anticipated outcome within this strategy. And there you have it. The trade is on the brink of finalization and I've pocketed $730. Navigate to TradingView, incorporate envelope and SMA into your chart, calibrate, and experiment with them. So what is an envelope? Envelopes are technical indicators that are typically plotted over a price chart with upper and lower bounds. The most common example of an envelope is a moving average envelope, which is created using 2 moving averages that define upper and lower price range levels. Envelopes are commonly used to help traders and investors identify extreme overbought and oversold conditions as well as trading ranges. How envelopes work. Traders can interpret envelopes in many different ways, but most use them to define trading ranges. When the price reaches the upper bound, the security is considered overbought and sell signal is generated. Conversely, when the price reaches the lower bound, the security is considered oversold and a buy signal is generated. These strategies are based on mean reversion principles. The upper and lower bounds are typically defined such that the price tends to stay within the upper and lower thresholds during normal conditions. For a volatile security, traders may use higher percentages when creating the envelope to avoid whipsaw trading signals. Meanwhile, less volatile securities may necessitate lower percentages to create a sufficient number of trading signals. Envelopes are commonly used in conjunction with other forms of technical analysis to enhance the odds of success. For example, traders may identify potential opportunities when the price moves outside of the envelope and then look at the chart patterns or volume metrics to identify when a tipping point is about to occur. After all, securities can trade at overbought or oversold conditions for a prolonged period of time. I truly appreciate the time and focus you've dedicated to this video and to my channel. It's awesome that you've stayed with the video this far. And I'm hoping that like button has already felt your touch. Just a friendly nudge to keep my Telegram channel in mind. Subscribing there opens the door to our collaboration. To be clear, I'll handle the heavy lifting, while you may just mirror my trades. No need for complexity.